Hey guys, so the last few months have not been great for growth stocks, especially those in the tech and electric vehicle sectors, with many of these stocks actually down significantly from their all-time highs. We have seen rising inflation in the US, bringing on fear that interest rates will be raised in order to contain the rising inflation, and this would be a bad thing for growth stocks because it would mean that borrowing money is now more expensive for these growth stock companies. And then on top of that, the valuations of some of these stocks just got a bit too high, and there was too much growth being priced into the market caps of some of these companies. So the correction that has come is therefore quite healthy for a lot of these stocks, but it is obviously hurting the people who are invested in these companies in the meantime. It's also clear that a number of large funds and investors have shifted their portfolio away from growth and towards value, including some recovery plays as the economy starts to open up fully again. So with many of these growth stocks being on discount right now, it could be a great time to either start a new position in one of these companies or to add to your existing position. So I thought in today's video I'd take a look at 6 growth stocks that are down significantly from the highs of a few months ago, but have massive potential for growth in the coming 5 to 10 years. As there are a number of stocks that I'm going to be covering in this video, I won't be able to go into full detail for each of these companies. However, I will briefly look at some of the key points around each company, as well as some of my own thoughts on why it could be a good investment right now for long-term growth. So I hope this video can give some people some stock ideas on potential stocks that they can buy on the dip right now. If you do enjoy this video or find it useful, please be sure to leave a like, as that does help out the channel a lot. Also be sure to subscribe if you'd like to see more videos similar to this in the future. And apart from that, let's get right into it. So first up is Palantir, and this is one that I have covered on my channel before in a bit more detail. So Palantir are a software company specializing in big data analytics, working with both government and corporate organizations, usually with contracts that are worth tens or hundreds of millions every single year. So data is becoming more and more valuable and powerful, and the organizations that can get the most out of their data are at a significant competitive advantage over their rivals. I believe that Palantir are only going to grow in the future as their service becomes more relevant and more valuable to large companies and governments across the world. Palantir are a fast-growing business and are expecting to continue to grow their business rapidly in the coming years. In Palantir's Q1 2021 earnings, they achieved 49% year-over-year revenue growth for the quarter, and the chief executive expects revenue to increase by at least 30% every single year until at least 2025. So the stock is now down by almost 50% from the all-time highs of $39 per share at the end of January, and is now trading for around $20 at a market cap of $38.2 billion. So next up we have Tattooed Chef. So Tattooed Chef are a plant-based food company that are selling a range of products across big retail stores like Walmart, Costco and Target. These products are mainly in the frozen food sector, however, they are branching out their range, growing their total product line every single year. They are growing their SKUs and distribution points for their branded products across the major retailers at a very fast pace, increasing their points of distribution to 23,000 in the year of 2020, which is a 155% increase compared to 2019. And with the aim to reach 65,000 distribution points in 2021, a 182% increase compared to where they finished in 2020, Tattooed Chef are definitely not planning on slowing down anytime soon in terms of their business growth. The global plant-based food market is growing every year and is expected to grow at an 11.9% compound annual growth rate between 2020 and 2027 to reach a market size of $74.2 billion. Global diets are shifting towards plant-based food due to nutritional benefits that they give, and this is definitely contributing to the increasing market size of this sector. The stock is down by around 35% from the all-time highs of $28 and is now trading for around $17.80 at a market cap of around $1.4 billion. So next up we have another plant-based food company called Beyond Meat. So similar to Tattooed Chef, Beyond Meat are also a plant-based food company who focus on selling meat alternatives across a variety of worldwide retail channels as well as food service and restaurant channels. As I mentioned earlier, the global plant-based food market is growing at a very fast rate, but also the restaurant and food service sector is set for a big post-pandemic bounce back throughout 2021 and beyond. Now, this part of Beyond Meat's business has been hit quite hard, which has been affecting their revenue growth and contributing towards a drop in the share price. Personally, I can see the stock performing well over the next 12 months or so, with revenue from this side of their business set to soar in this post-pandemic boom, while their retail-based revenue also continues to grow at a decent pace as well. Beyond Meat are also significantly increasing their manufacturing capacity in 2021 and have some promising customer partnerships in development right now, which include Starbucks, McDonald's, Pizza Hut and KFC. The stock is down by around 45% from the one-year highs of $194 and is now trading for around $102 per share at a market cap of $6.5 billion. So next up we have Advanced Micro Devices, also known as AMD. So AMD are a semiconductor company that are one of the leading providers of high-performance computing components and data center technology. They produce some of the most powerful mobile and desktop processors, as well as high-performance GPU and graphics components. The demand for semiconductors across the world is increasing rapidly every year, and in 2021 alone, the industry is expected to grow by 10%, while companies in the sector could see their earnings increase by more than 10% to around 15 to 18%. Now, there is a global semiconductor shortage right now, with many companies not able to get hold of enough semiconductor products to match the demand for their products. We did see this earlier this year, where major car companies like GM and Ford had to slow down their vehicle production due to the chip shortage across the world. AMD are still a fast-growing business and expect to grow their revenue by 37% in 2021. The business fundamentals have recently been outpacing the share price growth, which is now down to around $74 per share, which now leaves the stock at quite an attractive valuation, with a PE ratio right now of around 31. So the stock is now down by over 20% from the all-time highs of $97, and the market cap is now $90.3 billion. So next up we have Enphase Energy. So Enphase Energy is an energy technology company that design and manufacture software-driven energy solutions for homes and buildings, which includes solar generation, home energy storage, and web-based monitoring and control. The addressable market for their products and services is expected to increase significantly over the next few years, with the market size for residential solar and storage continuing to grow. Residential solar has only reached 3% of the US market so far, which is projected to grow to 13% by 2030, opening up millions of potential homes and Enphase customers. Now, Joe Biden has plans to reduce the US carbon footprint and is really pushing for increased renewable energy usage across the US. He has also allocated billions in his recent US infrastructure plan to improve and increase renewable energy usage across the country. Now, this spending and other government incentives could really help companies like Enphase to grow significantly in the coming years, with more and more households being pushed towards solar energy for personal use. The stock is down over 40% from the all-time highs of $213 and is now trading for around $117 at a market cap of $15.9 billion. And then finally, we've got a bit of a unique company, which is MicroStrategy. So MicroStrategy is a software company that has been around for decades now, which has an enterprise value of approximately $1 billion if we are just valuing the business of MicroStrategy. However, they are a rather unique company because they have also been aggressively buying Bitcoin with the cash that they have on their balance sheet and with the new cash that they are generating through their business operations. So MicroStrategy now own 91,850 Bitcoin, which they have acquired for a total cost of $2.2 billion, which now has a market value of around $4 billion due to price appreciation over time. With a current market cap of around $4.7 billion, the majority of MicroStrategy's market cap is now made up of the value of the Bitcoin that they hold on their balance sheet, and there is now even an arbitrage opportunity for the value of their software business being undervalued compared to the market cap of the company. If you are bullish on Bitcoin, then MicroStrategy could be a good option to consider, as the stock has potential to grow significantly in the coming months if Bitcoin does bounce back from the current slump that it is in, and it does reach heights of $100,000 or more, which is what a lot of people are expecting to happen by the end of the 2021 year. It is also a great way to gain Bitcoin exposure through a tax advantage stocks and shares account or even a retirement account. The stock is now down over 60% from the 1-year highs of $1,273 and is now trading for around $485 at a market cap of $4.7 billion. So that is all for today's video. Please remember that this video is for purely entertainment purposes only and it is not financial advice. I am not a financial advisor. You should always make sure to do your own research on all the stocks covered in this video, as well as any stock you are thinking of investing in before you think about putting your own money into them. But with that being said, I hope you guys did enjoy this video and found the 6 stock picks that I did cover in this video useful and informative. If you did enjoy the video, please be sure to leave a like, as that does help out the channel a lot. Also be sure to subscribe if you'd like to see more videos similar to this in the future. Drop me a comment, let me know what your favourite stock is from this video, or any other stock that you'd like me to cover in the future. And apart from that guys, thanks a lot for watching.